Hi, today I'm doing a credit instructional video. The first question would be, what is credit? Credit is the ability of a customer to obtain goods and service before payment based on the trust that the payment will be made in the future. There are many types of credits. Two most common types are installment loans and revolving credit. Installment loans are like student loans, and a revolving credit is a line of credit that you keep using after paying it off. You make purchases with it as long as your balance stays underneath your credit limit. Your credit limit can change over time, and it depends on the card you have. And credit cards are the most common type of revolving credit. Credit cards. Not all credit cards are the same. Some have interest. Interest is the cost of borrowing money. Lenders generally change the percentage based on your daily account balance. Some credit cards may have different interest rates based on the type of activities you use your card to purchase with, like purchasing clothes or food or making cash advancements. So you just have to read the fine print before you sign up for a credit card. Another one is fees. Many credit cards charge fees, but not all credit cards charge the same amount. Before signing up, read the fine print to fully understand what fees you're responsible for paying. Most common fees are annual fees, which are like membership fees. So you are charged once a year for just having it. So if you never use it and it's just sitting in your wallet, you're still supposed to pay the fee because you're paying to have it. Another one is transaction fees. Those are fees that are collected when a card is used for cash advancements. There is late payment fees. They charge if the payment is received after the deadline. And then there's another fee, the fourth one, which is over credit limit fees. They are fees that you pay if you exceed your credit limit on your set account. Credit scores. Credit scores is a 3-digit number that is mathematically combined with your credit report. It's designed to predict risk, and your credit score can mean the difference between being denied and approved for credit and low or high interest rates. Having a good credit score helps you qualify for loans, apartment rentals, and possibly utilities connected without a deposit. What goes on your credit score? Normally it's like payment history, the amount you owed, how long you had the credit for, and the type of credit you used, and new credit. Good versus bad credit. Having good credit means that you are making regular payments on time on each of your accounts and it's fully paid. And bad credit, you're having a hard time to hold up the end of your deal, like you can't pay a full payment or you are late. How to check your credit score? Federal laws mandate consumers' right to a free credit report annually from each credit reporting bureau, not credit score. Credit score and report are two different things. You can there's like little websites you can use to figure out your credit score. You can use Credit Karma, or you can purchase it at your bureau. Three major bureaus are Equifax, um, TransUnion, and Experian. And the way you can contact them and get a hold of them is you can call them or you can visit their website. Just look them up. Yeah. Um, Bureau usually keeps track of the money you borrow and if you make any payments on time, what you owe, and how long the loan is for. An example of this would be you get a loan to pay for a car, but if you don't pay off that loan, they still own the car, so you still have to pay the loan and the time set they have for it. How to maintain a good score. How to maintain a good credit score, you would basically just pay your pay on time. It helps to pay a little more than what is required of you. So let's say you're required to pay like $50 every month. So like if you pay 75, that's gonna help your score a lot, and it shows that you are responsible enough to even exceed the expectations that were required of you. And try to pay it off earlier. What is a credit report? A credit report is a statement that has information about your credit activities and current credit situation, such as loan paying history and the status of your credit account. What goes on to a credit report would be personal information like your social security number, your birth date, your current address and phone numbers, and your credit account. Your credit account is the credit limit or the amount you have to spend, your balance on it, your previous payments to your account, the day it was opened and or closed, and the name of the creditor. Why is your credit report important? Your credit report is important for like various reasons, but some of the big ones are businesses check your credit report to make decisions about you, and banks check your credit report before approving you for credit and loans. A reason for this would be like mortgages or auto loans. Um, Landlords also possibly can review your credit report and decide whether or not if they want their rent to you. Because if you pay your total when it's due, then the renter is going to see that you are responsible and you can pay rent every month. Your credit report affects many parts of your lives. So keep your score up and do the best to maintain a good average score, or be extra and exceed it. Yeah, that's my lesson.